Is Temu stock a buy? I bought some of Temu's parent company stock, PDD, and I'm thinking of buying more. And I'll explain some reasons why you should buy Temu or why you shouldn't buy Temu. Temu is very fast growing. It's been one of the fastest growing e-commerce websites in the last several years. It's been one of the most popular shopping apps on the Google Play Store with over 500 million downloads. Also, it's been one of the most popular apps in the Apple App Store. PDD has a low valuation. The price earnings ratio for PDD, which is a high growth company, is only 11. If we compare that to Amazon, Amazon has a price earnings ratio of 43. Also, if we look at the discounted cash flow on the Guru Focus website, the fair value is estimated at $150. So it estimates there's a 24% margin of safety. So on the undervalued, overvalued scale, it's more here in the green for undervalued. And it's showing that fair value would be $150. So it doesn't look like it's overpriced if you look at the historic growth. Temu has local warehouses. Just like Amazon, Temu has expanded warehouses in the US and around the world. They also, I believe, they have some in Australia and Europe. So if we click on local warehouses here, a lot of the same goods that are available directly from China are available from local warehouses. And the price is usually much less than what Amazon charges. Also, Temu has fast shipping. Compared to AliExpress, which I've used in the past, Temu has been much faster. It hasn't been as fast as Amazon Prime, but within probably a week or less, I get the items. Also, there's credits if the delivery is too slow. This example here shows that you get a $5 credit for late delivery. Also, the return policy is much better than AliExpress. It says up to 90-day return policy. Free returns for up to 90 days. So you have a 90-day return window to return items. Also, I've received a full refund on some of the items that I didn't like, and I didn't have to ship the items back. Now, compared to AliExpress, this is the AliExpress website. I've used AliExpress in the past. AliExpress, the website is too slow. The website is sluggish with AliExpress, and using the browser that I'm currently using, I've noticed all kinds of issues with the text changing to a different font. Just not as nice as Temu. Also, Temu has lots of discounts. Now, they have a sort of game that pops up where they do drawings and they give stuff back, but there's lots of discounts from various sellers for buying different things. Now, most of the items on Temu now require a minimum of $30, but there are still some places that have free shipping. This one here, only $8.71, and there's free shipping. Now, Amazon is trying to compete with Temu with the new app called Amazon Haul. I've looked at what Amazon Haul has, and the prices seem higher, and there's less of a selection than what Temu has. Now, another thing that may be a positive about Temu is that the revenue is not all from transactional services. So they charge a fee to sellers. So for example, PDD charges a fee to sellers when they list a product. Right now for 2023, this is the latest financial, it's showing $13 billion in revenue from transactional services, online marketing services, and others, $21 billion. So 62% of the sales came from basically sellers paying for advertising on the Temu website or listing placement. So their revenue is diversified a little bit. Okay, what are the cons of PDT stock? What are the bad things? The Google Play Store has suspended the Temu app in the past for malware. Now, after they removed the malware, they did add them back. Also, many people say the Temu app is dangerous and it spies on users. Temu's parent company, PDT, is loaded with communist officials. Now, 12 of the officials in PDD, the top officials, have held positions in the Chinese Communist Party. There's 12 of them here. PDD's organizational structure is very strange, and it's not very transparent. If we look at PDD holdings here, you see there's all kinds of subsidiaries, and they're not explained that well. And you don't actually know which one owns Temu. You actually have to dig and search and look around for that, and it's not really listed here. If you buy shares in PDD, is there some shareholder that owns a huge percentage of the shares? I don't know based on looking at this. It's very complicated. Also, the finances for PDD, the financials, are not very clear. They don't actually break up the revenues based on the region. They don't show the website Temu. They don't list Temu at all. So it doesn't show which one of these is the owner of Temu and the revenue breakdown. Temu is also based in the Cayman Islands and Dublin for their headquarters. It's basically an empty office.
The first floor of this building behind me in the centre of Dublin is what PDD Holdings has been telling US regulators since March 2023 is their principal executive office. There's a plaque on the wall outside the office, but in fact the company that's registered in Ireland is not Temu or PDD Holdings, but another company completely, Whaleco Technology Limited. I wanted to go and visit them and I tried to get up to the first floor, but they have no reception there, and I was asked to send an email.
TikTok has also been banned. So if TikTok has been banned, which is basically an entertainment app, why is Temu not banned? Temu probably has more reasons to be banned than TikTok. Temu actually has access to your spending habits and credit card data. And they've had a history of actually having malware, but Temu is publicly traded, whereas TikTok wasn't. So I think that's the main reason. But Temu is loaded with Communist Party officials in its leadership. Okay, another reason not to like Temu is its minimum order amount is getting too high. It used to be everything was free shipping. Now, if you start clicking on stuff on Temu, you'll see that most items will say if ordering $30 plus. Otherwise, they're charging a $3 fee, $2.99. So most of the items that I come across are actually not doing free shipping unless you spend $30 plus. So at that level, you could buy something from Amazon Prime and maybe even save money and not have to pay shipping and handling. Temu is also known for selling low quality goods. People talk about Temu junk. Temu is also known for selling fake or counterfeit products. Amazon is also offering a Temu type clone called Amazon Haul. Now, Amazon has a lot of experience in e-commerce. They could easily crush Temu, I think. Now, Temu has also been accused of having goods that are made using forced labor and child labor. Now, Trump recently got rid of the de minimis trade exemption targeting Chinese imports with values less than $800 so that there would actually be the 10% tariff on everything regardless of value. And this was delayed recently because goods were piling up in customs because of the poor systems in place for dealing with it. It was predicted that its removal could overwhelm U.S. Customs and Border Protection employees with a mountain of low-value shipments. Okay, now I actually bought stuff in the past when it was actually, the limit was $400 and I got hit with tariffs. The way it worked about 10 years ago is I got a call from DHL and they said, hey, you owe us, we've got your stuff here in customs, you owe us a $40 tax. You can pay for it over the phone or our website. And I actually had to go to the DHL website, enter my credit card data, and pay the tariff. Now, if the system is the way it was back then, and you've got people with $3 orders, $5 orders, and you've got all these shipping companies calling up customers saying, hey, you owe us 30 cents, you owe us 40 cents, and so on, that's not going to be very efficient, and people are just going to go somewhere else. So until they can come up with an efficient system, if they have a system like this in place that's that slow, people are just going to give up on Temu probably altogether or go with the local shipping option. There's lots of competition from websites such as eBay. eBay also has a lot of Chinese sellers, and a lot of these actually have a lower shipping amount. This one here that I found for socks, free shipping, 99 cents with free shipping. Also, Amazon is a competitor, and Shein. Shein is more than just clothes now. These are all competitors. There was also another company similar to Temu in the past, very fast growth, lots of marketing just like Temu, called Wish. Wish basically failed and was sold for only $173 million in cash. Once this was valued in the billions, now it's basically sold for a fraction of what it was. Temu has been squeezing sellers out of the market by charging lots of fees. They have been known to squeeze the price down for products and make it where it's unprofitable for sellers. It's been so bad that people actually protested over Temu's penalty policy. Temu penalizes sellers if they don't meet the certain criteria. For example, this guy here says, I'm a small seller. I would need to pay a fine of $15,000. I may not be making enough money to pay, and she was not yet making enough profit to pay her fines. Fines can be if a customer selects quality as the reason for the refund. Temu will fine the seller 5 times the price of the product. Fines could be as high as 25 times the price of the product. Now, that may actually be good news for customers to prevent counterfeit goods and for low quality goods, but for a lot of sellers, this may actually be too much. Now, Temu actually makes more money from sellers for marketing and listing placement than it actually does from the selling of goods. Temu charges suppliers a commission from 5 to 15% of the sales price and additional fees for shipping and handling. Now, my gut tells me that Temu is actually losing money in the US. Now, I've bought from Temu before, and I've had several items that I've returned. They've offered me a credit or a refund, and I didn't have to send the item back, which was great for me, but I'm pretty sure they didn't make money on me. And if a lot of people are like me and they're placing orders and they're losing money on customers like me, then I believe that they're losing money in the US because of that. Now, what's surprising to me is that PDD stock is not down more than it's at right now. If we look at the February stock price, it's actually up to $114 a share. And after the tariffs, it was down to, I would expect that the stock would have gone down because of the tariffs. So I'm really surprised that it hasn't gone down more. Now, the shipping rates back in 2019 were much better than they are now. Back in 2018, Trump threatened to remove the U.S. from the 144-year-old postal treaty. Now, Trump argued that the super low shipping costs that buyers were paying from Chinese goods was causing the postal service to lose lots of money, so they renegotiated it. After that, the new rates kicked into effect around 2021. So by 2021, we actually had higher shipping costs for Temu. So the super cheap shipping costs and the 99-cent with free shipping option after that kind of ended. You don't really see that as much anymore. So now Temu has higher shipping costs and you've got the 10% tariff. And so I think the stock should probably be a little bit lower based on that. But Temu is already so cheap that I guess you can't be too picky. But with all the sneakiness...
What is it that American stockholders are actually buying? Because you have this complicated system where what they own is a stake in a Cayman Islands company. That company has some contracts with operating businesses in China.
In China, all their operating companies are owned by various people. That could be a problem if there's any dispute between shareholders and the people who own all these companies that produce the majority of their revenues.
So these various subsidiaries associated with PDD, I mean, who knows if these could be secret shareholders that own more of the shares? Who knows who owns what in here? These could be shareholders and some of the people that could own a significant portion of the business and we're not aware of. So the whole thing is very, very shady to me. And the creator of the company has done shady stuff in the past. He apparently owned a significant portion of the business and it showed nowhere on paper.
The origin story of Pinduoduo is also confusing. But what it does show is that the founder, Colin Huang, has this history of muddying the waters around who exactly owns what to do with his companies.
Back a decade ago, Colin Huang, who was this ex-Google engineer, was running a series of companies in this one building in Shanghai. And they just basically sold cheap stuff to Americans. Although Colin Huang was behind them, he didn't own any of the companies on paper. In China, this is known as using white gloves or bai shou tao. I followed the address on business documents to the home of one of these shareholders, and he was a 65-year-old man, and he answered his door with his shirt off and the TV blaring. And then there was the company that became Pinduoduo that was similarly held by this woman who was in her late 60s who owned 90% of the company. But when Pinduoduo later listed on NASDAQ, they told investors that Colin had controlled the company since its establishment.
I think if you encounter a company that is pushing boundaries in one area, it might make you ask, well, what else are they doing that we can't see?
I couldn't have said it better myself. Now, if the founder of PDD is showing that level of deception in his career, can you trust him with your money? Now, when I think about somebody hiding their ownership in a company, now I think it's sort of doing something deceptive to mislead shareholders, maybe that new investors are the largest shareholder, that you don't have controlling interest, Or maybe it's a non-compete agreement. If you're going to start a company and you have some sort of non-compete agreement, you could put the shares in someone else's name to hide the fact that you're running a competing business. Those are two examples, but apparently this is fairly common in China. Known as white gloves, it's not uncommon for wealthy Chinese to ask friends or relatives to hold their shares in companies to lessen their personal risk and shield their holdings from public scrutiny, which could also be to hide from competitors or perhaps from the government to keep them from maybe whisking somebody away for months without telling people where they're at. So maybe it's not as bad as I think, but to me, my first thought is deception against the shareholders. If that level of deception is common, what about the financial reports? Now, in that Financial Times video, they mentioned that they haven't had a CFO. So could these numbers just sort of be fake? Are these numbers fake? Are the revenue numbers fake? So when hiding ownership is fairly common, if that level of deception is fairly common, what about fudging the numbers? What about having bogus numbers, bogus sales numbers, bogus profit numbers, etc.? I don't know of many people that are buying from Temu on a regular basis. To me, the numbers seem very high, like 34 billion a year in sales in 2023, and now it's like 50 billion in 2024. That seems very high for something that I very rarely use. I don't know of anybody that buys from Temu on a regular basis like they would from Amazon. So I kind of question this, and they haven't had a CFO for years. And some of these numbers here, when it was in China, cannot actually be audited because these Chinese companies apparently can't be audited. When they are actually headquartered in China, apparently several years, they cannot be audited. So you have to question those numbers too. So I'm kind of questioning the numbers. It just seems too good to be true. Actually, the net income, I think, is higher than what Tesla's at, $8 billion a year. So the last few years, they went from $1 billion in net income to $8 billion. So pretty impressive. But if you believe these numbers, it's very good. If we look at the retail industry average, the average price earnings ratio is 30. PDD's at 10. And when we look at the trailing 12 months, their earnings per share growth, 133%. Gross margin, 62%. Return on equity, 47%. Return on assets, 27%. Only 3% long-term debt to equity, which is very low. Net income per employee, $893,000. Industry average is only $82,000. Revenue per employee, $3 million. And when we look at the ownership, it says other is 69%. So maybe that's the secret insiders. So what do you think? Would you invest in PDD or would you skip it completely? So I'm finding it very difficult to buy PDD based on all the issues that I mentioned. So if I buy some, it's probably not going to be a significant holding. What do you guys think? Please feel free to comment below. Also, thanks for watching this video. Please make sure to like and subscribe. I'll put a referral link in the description where you can get a free tool set or $100 coupon bundle. So check for the link below.